Today I want to talk about a specific concept that a lot of you have been asking me about, like why am I selling options instead of just buying an option. So if you have gone into stocks recently, you probably have faced a lot of people with like thousands of percent of gains with their call options or with their put options on specific stock, especially if you come from a place like Wall Street Bets. People there usually buy a specific option, either a call or a put, usually with 0 days to expiration, and their return can be extremely significant. It can be like 1,000% return or 2,000% return in a week. It's very, very tempting to do this. But I want to show you like why I don't do this, and instead I do the opposite of that. I sell options instead of buying them. So if you've been following my channel, you probably noticed that I have a wheel spreadsheet where I do 100% wheel trades on my portfolio. So for those of you who don't know what a wheel is, there's a link in the description. But in the summary, basically with the wheel is that you sell options, you sell put options to start the position, and then when you do get assigned, you turn around and sell cover calls. And in the end, when you've called away your position, you completed the wheel. So that's the basic of it. But I want to go back and focus on why we sell and versus buy. So buying options versus selling options. So there's there's a couple of reasons on why I think one is better than the other, and I want to show you like why. So when you're buying an option, you basically buy the rights but not the obligation to have to, you buy the contracts, which gives you the right to buy a specific stock at a specific price. You have the right to buy it but not the obligation. So let's say you have a plug stock at 24.23. Let's say you think that plug is going to go up to $26 by next week. So you went ahead and buy a call option on it, and then for a 1 week expiration with the $26 strike price. Now with this, you have a few ways of winning. So you will win a lot of money if plug goes above 26 by next week. So every dollar that plug goes up, you make $100. So basically it's as if you own the plug shares, like 100 shares of plug, without putting up like $2,600. So that's the upside of this. You make money on that. But the key is plug needs to go up at 226 or actually above 26 by the time of expiration. So you have one way to win, and then you have a few ways to lose. Now you will lose if plug stays at 26 by expiration. So you will lose if plug is $26 by expiration. Why is that? Even though your call option is for your right to buy 26, that's because you paid a premium to buy this contract. So the price you pay for the contract is actually how much the premium is. So you actually pay for that out of the pocket. Usually maybe that's like $120. So you actually lose money if plug went to $26 by the time your contract expires. And then you will obviously lose if plug is less than 26. So even if plug finishes at $25.99, you still lose money, right? So that's, your contract becomes zero. So you lose the whole contract. The premium you pay for becomes zero. You lose the whole contract. That means you lose 100% of your investments. So yeah, imagine you buy like 100 contracts, like all your money will become zero. That's how people can lose 100% in a day. So obviously if plug, is way less than 26, you also lose 100%. So that's pretty obvious. So, you sort of lose in a lot of scenarios. Now, versus selling plug. So let's say I want to sell a plug put, right? plug powers puts and same expiration date, except that I believe plug will stay above $22 in a week. So what this does is that I'm selling this put right here, right? This is a put option. I'm selling this put right here that will expire in a week. And I want to bring back here, this is a call. So what I'm doing is I have a few ways to win when I do this. I have a few ways. So compared to, let's see. So the only way you win for if you buy a call option is plug goes above 26 plus your premium. So let's say your premium is $1.50, then you need plug to go above 27.5 for you to break even. So that's a lot of, like, it needs to go up a lot basically for you to win. But if plug like zoom past it, like plug goes crazy and goes all the way to $30, great, congrats. You know, you win, like you make a lot of money. That's how you win like 1,000% return. Now that happens rarely, you know, you need plug to really plunge through. However, now let's look at like selling options. So here, let's see the scenarios where we lose, right? We will lose this position if plug goes below 22, way below 22. So that's one way to lose because we sold the puts. So when we sell these puts, we netted like a couple of profits, because when we sell the puts, we pocket the premiums, right? So let's say the premium was $150. So we actually make $150 right away, and that will lower our cost basis for this option. So if we do get assigned on $22 for plug, we actually can offset that with this $1.50. So our cost basis is actually $20.50. So if plug goes below $20.50, we will lose. So this is actually a mistake. Let's change that. So this is why it's very nice to sell options, because we will only lose if plug goes below our cost basis, which is $20.50. That's the only scenario we lose. And there is no other scenario. However, like if plug plunges, like it really did bad, like company go out of business or something, like it could go to zero. Our max loss is the amount that we put in, which is 100 shares at $20.50. So our max loss is $2,000. But that's not likely to happen for the company to go to zero in a week. So that's the only scenario we lose. Like compare that to the other scenario. Now let's look at the scenarios where we win on this contract. So win if. So we will win if plug is above 22 by expiration. Sorry, 20.5. Like a little bit above 20.5. We actually win. Like we will make the, because our break-even point is $20.05. Now we actually, if plug trades above that, we win. Now, if plug trades at $22, let's say by expiration, plug trades at $22, we still win because we pocketed this right here. We pocketed the premium. Remember this? We got $150 for free right there. So even if plug trades at 22 by expiration, we still take this $150 there in our pocket. So now you own 100 shares of plug at $22, which it's currently trading at 22. So you don't lose anything there, right? You break even there, but you make 150 right here. Now there's even more scenario if we win. That is obviously plug goes above 22. So if plug goes above 22, we won't get assigned. This contract becomes worthless. But we pocketed this $150 right here. So our profit is that $150, and the contract goes worthless. Basically, whoever bought our contract, it went to zero. and we get to keep the $150 in premium that they paid us. So that's the great thing about this, you know. Now, if this is why I sell options instead, because you will win if the stock goes a little bit below your strike price of 22, right? You also make money if plug stays, like goes sideways. Let's say the stock decides to go sideways for the whole week and doesn't move much. If it stays at 22, a little bit above 22, you also win. Now, if plug actually goes above 22, you definitely win. So there's three scenarios. The stock can go sideways, can go down a little bit, and it can go up, and you win this in all of three cases. Now compare that to a call. You lose in all of three of these cases. You only win in one case. So that's exactly the reason that I sell options instead of buying options. So yeah, I hope you guys enjoyed this quick or MS Paint lesson. But feel free to join my Discord if you want to talk more about it, if you want to learn more about it. I definitely welcome anybody who's curious. Definitely love to share like what I learned with all of you. And definitely the way I find my my stocks to sell put or options on is definitely this TradeIV app that I built. I can easily see that all the stocks how they're doing, all the news about it. It even has a crypto tracker. There's Wall Street Bets chat string if you want. So it's very interesting and definitely helped me throughout my wheel journey. So far I have about almost $15,000 in profits. So yeah, if you want to follow this trade, this spreadsheet is completely open and free. Just click on the link in the description below. And yeah, you can follow my trade. Definitely. I look forward to see you guys in my comments or in Discord. I would love to hear from you. So see you guys next time.